Hello, it's Charles Kelly. I'm back again on Facebook Live. Sorry about the technical problems I had just now. And hi again to my listeners on my podcast, which you can find on Stitcher, iTunes, and on my website, moneytipsdaily.com. In case you don't know me, I'm Charles Kelly, author of the book Yes, Money Can Buy You Happiness, which is a full guide on making money, enjoying money, and keeping your money, keeping more of your money, and being happy with it. My podcast is called Money Tips Daily, which is designed to help you earn, save, invest, accumulate, and enjoy more money. So hello to everyone on Facebook. Sorry about the technical problem I had just a little while ago, and I hope you're all having a good day, and thanks for tuning in on Facebook Live. I really appreciate that. Today I want to talk to you about Airbnb. Now, Airbnb is a company that rents out millions and millions of properties all over the world, but they don't own the properties themselves. They're all owned by hosts that they call hosts or landlords. And the accommodation platform has plans to go public next year into 2020. They didn't give any more details, but they estimate a value of $31 billion, which is unbelievable. And you know, they're making around $1 billion in revenue per quarter, and the hosts, which included me at one time, I was a host for Airbnb, have made more than 80 billion from renting their properties as of this month, according to the company, which is unbelievable. And I think it's a great company. Airbnb, like Uber and Amazon and Apple, have been disruptive. They've disrupted industries, haven't they? They've brought prices down for consumers, and you know, they certainly changed things because the hotels don't like them. I think they've tried to block them in city centres. You know, now it's easier, isn't it, to get rooms when you go to a place and you haven't got a room. Usually they're all full. Now there's Airbnb. There's more competition. I think that's been good for consumers, and but they've done something more, which I think these companies all have in common. And that is, this is my thing, that they have, these companies, I mean, Amazon's worth, what, $1 trillion or something, Apple's $1 trillion as well, Uber's not so much, Uber's more recent, but they all do something which I think they have in common, and that is that they help smaller entrepreneurs make money as well. So they don't only just make money for themselves, but they help smaller entrepreneurs, and they work with smaller entrepreneurs to help them make money. Airbnb makes money for landlords like myself. I mean, I started with Airbnb 5 years ago when it was quite new. I'd heard about it from my son, and it was tremendous at the start. You know, you could list a property, you know, within an hour or so, you could get the property listed, and you know, immediately people would start inquiring for rooms, and I very rarely had a room empty. And the only reason I stopped it was because it was just too much work, and I couldn't get anybody at that time to manage the property for me. Now there are management companies that manage thousands of Airbnb properties just in London and around the world. You know, I went to a funding round, an angel funding investor meeting, and a company doing just this was looking to raise millions of euros in funding to expand their business. And so I think it worked very, very well. And if you think about Uber, it's helped to make drivers money. It's indirectly employing, you know, millions of drivers and companies who then supply cars to drivers. Amazon has helped small traders and businesses get a window out there on the online and put out an online store, which has made a lot of money for them and obviously for Amazon. Apple, through its apps and its stores, has made millions and millions of dollars for app developers and companies that, you know, provide services via apps on Amazon. So that might be something to think about if you want a really big business, that something that, you know, is disruptive. It helps consumers, but it also helps smaller people get into the market, and therefore you'll have millions of small businesses as your partner, which I think is a common denominator amongst those companies. And bear in mind, Airbnb haven't been going that long. They're already worth billions. But unlike some of these new companies that are floating, they are making money. There's revenue there. There's money coming in all the time. There's cash flow. It's not just like a vague website. Like Twitter didn't make money for a long, long time. And I don't think they're making that much money now. So I think it's an amazing system. If you have room or spare room in your house, it's a good way of renting out. Yeah, there's been problems. There have been some problems, but there's problems with any situation where you're a landlord, tenant. There's always going to be some issues. But when I had issues with any tenants or guests, as we call them, there were very few incidents, and it was usually sorted out. And also, I didn't have to collect any money. The money was paid into my account, and I just found it very, very good. As I don't use them now because I just found that it was just too difficult. But whole businesses have been built around dealing with Airbnb properties, and I also went to their convention a few years ago in Paris. They had a massive convention, and it was amazing. The guys who started the company were there. They were talking. They were young guys in their 20s, maybe early 30s, and they were quite friendly guys, casually dressed, and they talked about how they started the company, and they built this worldwide property business without owning properties. They don't buy the properties; they're all owned by the guests and the hosts who own the properties, which is a lesson for all of you who think that you can't get into property or the business without having lots of money. Clearly, there's a rent-to-rent type of business there screaming at you that can be done. There are people who have Airbnb properties that perhaps don't want to manage them themselves. We now call it serviced accommodation. And so don't say to yourself, well, I can't get into property because I haven't got any money, because you can. There are lots of ways of getting into property without having lots and lots of capital that you'd need to buy properties. Now, they do, of course, own properties as well. They're not just skint guys. They own properties. And in fact, they told us at the meeting that they actually used to rent out properties themselves. They would get out there and rent out their own rooms in their own houses just to kind of keep their hand in. And those are the days when I think it was less corporate. They were talking about the experience you have meeting people from all over the world, and there were people there at the convention that had travelled the world just in Airbnb properties, and there were quirky properties in tree houses and that sort of thing. I think now it seems to be a bit more corporate, but they were good guys, and it was a fantastic convention. I mean, they really organised it well. Everything was there: food, drinks. You didn't have to queue up some kiosk inside Excel. Have you been to Excel in London? One kiosk open, and 50 people, maybe 150 people come out of a session and queue up for this one coffee place, which is pathetic. Here at the Airbnb, everything was there. So they had different kiosks for different kinds of snacks and foods and drinks. I'm not sure if there was alcohol there. There might have been a bit of alcohol. There was certainly coffees and soft drinks and water everywhere. And it was almost like a religious experience. Even the staff were so, hi, I'm Airbnb. They were so happy and, switched on to Airbnb. A bit like an Apple store in that way. But it was a tremendous convention, a really good experience. And it was such a shame that because they were due to have a party on the Saturday night, but the party had to be cancelled due to the Paris bombing. It was that weekend of the Paris bombing a few years ago. I can't remember the year, but that was the Paris bombing night. And people were ringing me up saying, am I okay? But I didn't know. I didn't hear it. I was a few miles away. But it was a shame because the Airbnb staff were also going to do some community work in Paris, helping to clean up parts of Paris or just do some community stuff. So they were really giving back to Paris and spent probably millions of euros on that convention. And all the people who turned up were spending money on accommodation. I stayed in an Airbnb unit there, which is really nice, right in the centre. And it was such a shame that it was spoiled by these bombers who just wrecked the whole event. But from what I did see, that was only the last night that was wrecked, but it was a great convention. And I'm sure the Airbnb IPO will do very well. Now, there's another IPO being talked about for a little while, and that is Saudi Arabia's oil company, state-owned oil company, Aramco, which is probably the biggest company in the world. And they're planning to list, go for a public offering in one of the stock markets around the world. And they're telling that wealthy families, they're browbeating them into investing in this offering, which is expected to value the company at $2 trillion. And do you remember there was a story in the news about wealthy families that had been locked up in the Ritz-Carlton hotel in Saudi Arabia, and the new prince was trying to cut down on corruption, so he locked all these families up and said, right, unless we come to some arrangement and you pay back money that's owed to him, we're not releasing you. And some of those families still have their assets frozen, and they're apparently been told that they must invest them into this Aramco IPO, which is a novel way of getting investors. I certainly won't be investing in there, because how can you invest in a company that forces investors to buy shares in this startup company? It just seems it's a world away from what we think of in the West as a free market. Now, if you'd like to know how to get into property and you want to learn more about things like rent to rent and no money down strategies, email me at charles@charleskelly.net or send me a message on Facebook. Now, my word of the day is limited company, because we talked about companies and corporations. Now, my word of the day is limited companies. Hello again, Hazel. Sorry about what happened before, just going on Facebook Live there. Now, a limited company, or in America it's called a corporation, is an organization that's set up for you to run your business. This means that you're a shareholder in the business and you have responsibility for that company, but the financial liability is limited by the value of the shares that you own but have not yet been paid for. So they would be called, you've got paid up shares and shares that are not paid up. And company directors of companies are not responsible for the business debts. Now, I'll explain that in a bit more detail. In other words, if your business is a limited company and you are the shareholder in that company, it doesn't have to be a big business. You could be a plumber, a small business or a large business, but if it's set up as a limited company, you could be a financial advisor, Charles Kelly Limited or whatever. And in that company, it's like that company is the entity of the business. That company is limited company is the business. You are then the shareholder in that business and maybe the director of that business. Now, let's say that company goes bust, it goes under, it gets made bankrupt, and there's £10 million worth of debts, or you've been sued for £10 million, then you could close that company down, or it could be closed down, but you will not be liable for those debts personally. The company over here is liable for the debts, but you're a shareholder and you're a director, but you're not personally liable for those debts unless you've signed a personal guarantee for those debts, or you've signed some sort of guarantee for a bank loan personally. Then you would be liable for those debts. Or if you were found to be criminally negligent in fraudulent in creating debts and closing the company down, you could be personally liable. They could come after you. But let's say in general you're running a straightforward business, you get sued for a lot of money, there's not money in the company to pay. You could say, well, that's it, close the company down, I'm walking away, and you wouldn't be liable. However, if you were running the business as a sole trader, so I just set up my business tomorrow, Charles Kelly, doing a bit of marketing, sole trader, no limited company, then in that case where if I run up a lot of debts or I got sued, I could be liable for those debts, and the creditors then can go after the personal debts, personal assets of the person that owes that money, and they can go after your house, they can go after money in your bank and anything else that you own. They can send bailiffs around to collect that money. So that is the definition of a limited company. Sometimes in the UK we have companies which say John Smith Limited. It can be the word limited, or it can be LTD. Now, when it's LTD, we don't say John Smith Ltd, we say John Smith Limited. It's an abbreviation for limited. But I would suggest, in most cases, if you're running a business, you're usually better off in a limited company from the point of view of liabilities, but it does involve a bit more tax work, because you've got to file a tax return for the company and maybe your own tax return as well. And so it does involve a little bit more work. Sometimes it can save you tax if you're a higher rate taxpayer, but you need to talk to your accountant about that as to what is best for you. But I would normally advise businesses that they're usually better off as a limited company, especially if they're in something like financial advice, where they can easily be sued for wrong advice, or even years later, and it's normally just tidier to have a limited company. Property businesses now, a lot of people are setting up property in a limited company because of the tax treatment they'll receive on the interest they pay. However, the interest rates on loans made to limited companies is a lot higher. So is it worth it? I don't know. I've got a bit of both. So I've got limited companies and properties owned in my own name. But if you're building certainly more properties, and you plan to build a property with, say, a company with 4 or 5 properties, then you're normally better off having it in one limited company. It also means that you're not, you can just do one tax return for the property business, rather than accounting for each property as you would as a sole trader. So that's the word of the day: limited company, or corporation as it is in America. And it's interesting that some even large companies use the limited liability to get away from paying debts. Companies now are saying to their landlords, we can't afford these rents for the shops that we've got all over the place, so we want a rent reduction, or we're just going to close the company down. And the landlord normally has to agree. They can also go into administration, which is not outright bankruptcy, but it gives them a breathing space from their debt, their creditors. And the drugs company in America that is in trouble over these opioid drugs that have apparently damaged people, they've killed people. They've been sued recently. The case was won, and they're expecting a lot more cases to come forward. And it was like something out of a John Grisham novel. And John Grisham actually had a novel, the lawyer turned writer. The John Grisham had a novel about people suing a drugs company. No, it was an insurance company rather, suing an insurance company. And then when they won the claim, the insurance company went into bankruptcy. And that's what this company is doing in America, because the shareholders and directors, who are all very, very wealthy people and give money to charities and all that sort of stuff, open up art galleries and all these sort of, they're trustees of art galleries and museums and that sort of thing. They have no personal liability. So if that company is sued for 100 billion and the company hasn't got the money, they're not going to go after the directors or shareholders for their money. They're going to lose money, but they wouldn't lose as much as if they were personally into that. So I hope that's explained it in a long-winded way. Thanks for listening. As I said, if you're interested in property investment and learning how to do it, just email me on Facebook. Thanks for listening, and have a great weekend wherever you are. This is Charles Kelly, bringing you money tips to help you save, earn, invest, accumulate and enjoy more money. As I say, thanks for people listening on Facebook Live. I'll just say hi to a few people: Manny, Hazel, a few others there coming through. Sorry about the technical problems I had earlier, but the screen went a bit funny and I had to cut the session because I couldn't get back to the screen. But I hope you're having a good day wherever you are. It's a beautiful sunny day here in London, enjoying the great weather. So great. Bye for now. Have a great weekend.